Hey everyone, and welcome back to another episode of Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So today we're going to do a macro update, and then going forward we're going to have a little bit different format on the show, covering a specific topic kind of on certain days of the week. So today is going to be Macro Monday. Without further ado, we'll get into the macro side of things here. So we did talk last week, obviously tariffs, trade wars has been a big concern in the back of our minds. We do see here Chinese counter tariffs to kick in as Trump threatens more. So we're going to scroll down a little bit here. Basically see here retaliatory Chinese tariffs on a range of U.S. products due to take effect today. Obviously, trade friction between the two rivals heating up, no end in sight. China, their tariffs are going to range from 10 to 15% applied to crude oil, liquefied natural gas, farm equipment, and other products from the States. In response, Trump has said he's going to hit China with a 10% blanket duty on all their imports there. So yeah, no signs of that slowing down. Obviously, we have seen some de-escalation in terms of the U.S., Mexico, Canadian relationship there, but on the Chinese front, obviously, that's their biggest kind of trade deficit there with China, and Trump definitely not backing down. This is interesting to see because in 2019, I have pointed this out in the past, we were in a similar situation with Biden and Xi Jinping. Essentially, they were each raising rates, and they came to the conclusion that it was not beneficial for either party at the end of the day, and that's kind of what we see here. There's no winners in a global trade war. It harms the interests of both people. We've talked about that. So what is needed now is not the unilateral imposition of tariffs, which is what Trump is doing, but we need dialogue and consultations based on equality and mutual respect, and we need the U.S. to stop using its, stop politicizing its dollar, stop using economic warfare as kind of a way to get what you want. Obviously, it's going to be way more productive if they just have an open dialogue that's beneficial to everyone, address some of the concerns, maybe, implement some tariffs that actually make sense, but a blanket tariff across all imports and exports is really going to have an effect on the individual economies, and kind of therefore, it will have a bit of a systemic effect through global markets as well. We're not sure how it's going to look. Obviously, last week during the trade war tensions, we saw markets kind of open green and then end up dumping red. They've kind of opened green again today. We'll look at that later, but we'll see how they hold into the day. Obviously, see again, the U.S. it's not unknown that they use their dollar, they weaponize their dollar, they can destabilize, essentially destabilize countries by weaponizing their dollar. We do see them using these forms of economic kind of warfare or coercion to get what they want. Obviously, Trump not stopping there. Beijing's response also to not stop with the retaliatory tariffs. Authorities announced an antitrust investigation into Google and added 2 other U.S. companies to an unreliable entities blacklist, increase their export controls on rare earth metals. So China's main exporter for their rare earth metals is to the U.S. So yeah, see them putting more constraints on the rare earths there. Obviously, see here, Harry Murphy-Cruz, the head of China economics at Moody's Analytics, said the response is a warning shot. They don't necessarily want to make the situation worse, and so their response is going to be restrained. So basically, they're saying relative to what they could do, this is a very tapered back kind of response. Again, they're pushing for that constructive dialogue, not the economic warfare that Trump's kind of really pushing the two countries towards. Do see here, we can make it really tricky for you if it gets worse. Obviously, just a threat. That being said, Trump's probably not going to like China threatening him, and, he might respond anyways. But kind of digress there. Obviously, see here, China's allowing the effective tariff rate on its American imports to be much lower while sending a signal. So theoretically, they could raise their tariff rates on their imports a lot more, affecting the U.S. economy. And say U.S. tariffs are covering about $450 billion worth of Chinese goods. The Chinese tariffs are only covering 15 to 20 billion in American goods. So less than like 1/20th of the amount that America is putting onto the Chinese goods is what China's doing to the Americans. So you can really see if they do ramp up those tariffs into the hundreds of billions, that's going to have a major effect on the U.S. economy. So flipping over here, we do see here, we'll get back into this. So more tariffs again. So this is interesting because we had Trump say that he was going to postpone the tariffs on Canada and Mexico, and then he puts in these tariffs which essentially affect Canada and Mexico the most. It's kind of ridiculous. Some people say he's moving the goalposts here. So yeah, Doug Ford says he's shifting the goalposts Obviously, he got what he wanted. He got Canada to agree to invest $1.3 billion in the border. He got Mexico to send 10,000 troops to the border. And he still puts in this tariff, which affects steel and aluminum. And that's going to affect Canada and Mexico being major trade partners of that commodity. We do see here it's targeting $14 billion worth of products with a 15% tariff on coal and LNG, 10% on crude oil, farm equipment, and some vehicles. Monday's tariffs would come on top of existing metals duties. So there's already duties being paid on these metals, and Trump's just added another 25% onto that. The largest sources of U.S. steel imports are Canada, Brazil, and Mexico. So again, this is going to affect Canada and Mexico the most, the two countries that he just said he was going to give a pass on tariffs. Yeah, so don't trust anything a politician tells you. I've been saying that. I don't trust politicians, I don't trust billionaires, and I don't trust rich politicians especially. So obviously, just continuing on, Canada is the largest supplier of primary aluminum metal to the U.S., accounting for 79% of total imports in the first 11 months of 2024. And then we also see Mexico is also a major supplier of scrap aluminum and aluminum alloy. So again, yeah, it's going to hurt the Canadian and the Mexican economies, and it kind of goes back against what Trump just said he would not do in return for that agreement and cooperation on the border front. So we'll see how Mexico and Canada retaliate. Again, this isn't going to be good for global escalations in terms of a trade war. You know, if he's saying one thing and then backpedaling, moving the goalposts, and kind of, still throwing those tariffs onto Canada and Mexico, it doesn't look good from a friendly and kind of a relationship standpoint. You just can't really trust what he's saying going forward. And then, yeah, that blanket tariff on China really going to affect imports, especially them being the major deficit that the U.S. has. So just following it still. Another thing we do see here, Trump's rollout of the tariffs, widely criticized and kind of prompted volatile market reaction. So that's kind of, we've pointed out before. Fears of more to come. Beijing launched a complaint with the World Trade Organization. We also see the French President Macron here warned in an interview that he's willing to go head-to-head with Trump on tariffs. We also see Trump looking to put tariffs in the European Union. So we see here tariffs would also harm European countries, but also the U.S. So again, no one's really going to just back down. China's standing up for themselves. We see Europe, they're ready to stand up for themselves. We see the French, they're ready to import tariffs, go head to head. So just scrolling down here, we also see the German economy minister, Robert Habeck, said on Monday, Europe must and can only react unitedly and decisively to unilateral trade restrictions, and we are prepared for this. So that's something I talked about when we initially talked about the trade war. I kind of said, if Trump puts tariffs on everyone, what's to stop everyone from banding together and really hitting them back with their own retaliatory measures? That's pretty much what the German economy minister is alluding to here. If you see Europe kind of in a combined effort to hit the U.S. back with tariffs, and then maybe you see Latin American countries a little more annoyed, you see China retaliating, you see the French potentially willing to get involved in this. So yeah, again, and then Britain also, we see any tariffs imposed on Britain would essentially have a devastating blow to their steel industry here, harming their high-end steel exports to the U.S., which is Britain's second largest export market. So again, all things that are really going to affect macro resource markets and therefore kind of global economic markets. This isn't going to just blow over, no harm done. There is a lot of repercussions if tensions continue to escalate, and we need to be aware of those. So we also see Trump flag tariffs against Taiwan. The Taiwan government and state-run petroleum company are also taking steps now to buy more U.S. oil and gas. So essentially, again, that's what Trump wants. He's just going to threaten tariffs until you do what he wants, and then give you, a few days, a weeks, maybe a month, and then he's going to threaten you with new tariffs until he gets what he wants. So at what point do all these countries kind of just say enough is enough? We're not giving in. We're just going to band together, and we're going to hit you where it hurts. So we will see what happens going forward. But kind of moving on here, taking a look just at a little bit of the consumer confidence here, consumer sentiment. This is from the University of Michigan. So it is interesting to see We talked about that divergence in consumer confidence between the lower and upper classes. Obviously, lower middle class struggling with the raising costs to live, and the upper class doing quite well because assets are at all-time highs. That being said, the majority of people are in that middle lower class. We see here basically consumer confidence as well as current economic conditions and their expectation of future conditions, it's all trending down over the last 3 months here. So yeah, we do see consumers getting a little more fearful of what's going on in the market. Obviously, raising tensions globally, not ideal for anyone, especially on the consumer end. We broke down how consumers end up footing the cost of bills often, or the raising costs in price, and when we come into a trade war. Flipping over here, we also see a year ahead inflation expectations have risen to 4.3%, jumping a full percentage point from a month earlier. Again, we talked about the inflationary kind of effect of a potential global trade war. This is likely kind of just pricing that in, but such a substantial 1 month rise, so a whole percentage point, has only occurred 5 times in 14 years. So yeah, very rare that this happens, and it makes sense that it happens around this kind of global economic event here. And yeah, a lot of uncertainty in the markets. Nobody knows what's going to happen because Trump's going to come out and say one thing one day, he might change his mind, move the goalposts the next day, as we've seen. So again, we kind of have to be reactive, unfortunately, not proactive. Again, recognizing the risk in the markets and also recognizing the opportunities in the markets as well, because there is opportunities, there is risks. We can take advantage of both and then kind of mitigate our own personal risk in our portfolios, as well as still capitalize on potential moves in the market. Flipping over here, we'll get into some bullish news here because there's a little bit of bearish news to start. Obviously, Japan prepares its biggest crypto policy shift yet with ETF approvals. Their first investment firm, Metaplanet, is Japan's fastest growing stock, rising 35.75% in the last 12 months. Insane move. That is just absolutely crazy. Obviously, due to their adoption of the Bitcoin standard. No Bitcoin ETFs are currently trading in Japan. So obviously, a lot of investors probably looking to Metaplanet for that Bitcoin exposure within a traditional investment vehicle. We see Japan's SoftBank has been investing billions in U.S. crypto and AI firms. Fresh wave of bullish crypto optimism could soon wash over Japan. Their financial watchdog is considering major tax cuts on crypto profits and regulatory revisions which may allow for ETFs to trade in the future. We do see here in Japan, crypto is classified as a security, which is actually interesting because a lot of people do not want cryptos to be registered as securities in the States. That being said, I kind of digressed there, but obviously they want to reduce the capital gains burden from 55% to 20%, so that'd be really good. That being said, there might be a lot of people who aren't willing to take profits because they don't want to pay a 55% tax bill. They might be more inclined to take some profits with 20%. So even though the tax incentive is better, it could actually have an immediate negative short-term effect on the market if people do sell due to that reasoning. We also see here opens the doors for spot ETFs. It is the 4th largest economy in the world, so it can attract more liquidity into the space. We do know they're just discussions and proposals, and the decision process could not be resolved until 2026. So not like this is any immediate news. There's going to be ETFs in Japan right around the corner. It could be well into 2025-26 before we get any kind of concrete clarity on that. But yeah, definitely interesting to see more companies adopting that Bitcoin standard. And it was the fastest growing stock in Japan. Thanks to that pivot, we see lawmakers eager to follow in the footsteps of the U.S. in terms of their kind of regulation around crypto. Obviously, the U.S.-Japan relations are deep. We see most notable is their pledge from Japan's SoftBank to invest billions and billions. It's hundreds of billions of dollars into the U.S. economy. We see them, again, they made that $50 million PIPE investment into Cypher. That's one of our holdings. That's one of the ones we follow. Cypher pumped like 50% the next day. It was a great job kind of acquiring that asset and positioning ourselves. And again, that's one of those assets where you position yourself fundamentally and you wait for the valuations, you wait for the potential news catalyst to come to you. That's exactly what we did, and that's what we're going to do going forward again. And also saying here, basically saying SoftBank would replace Microsoft as OpenAI's biggest investor, finalizing that initial $40 billion investment, and then leading the U.S. in an artificial intelligence with their Stargate project. So following that going forward, we'll just flip over here, kind of get more into some of the Bitcoin standard stuff here. So this is kind of Metaplanet. Currently, they've just acquired about $750 million worth of Bitcoin there. So they are planning to acquire up to $2 billion. So expect more purchases coming from them. Flipping over here, yeah, we do see here 745 million was what they increased their treasury with. And yeah, focused capital raise it's the largest focused capital raise in Asian market history. So yeah, we will follow that going forward. Continuing on, MicroStrategy themselves, they've rebranded to Strategy. So we see here they've resumed their Bitcoin purchases. They did take a little break there during the week of their earnings in kind of a blackout period. They did purchase $742 million worth of Bitcoin. We see here they bought another 7,633, total holdings of 478,740. Scrolling down here, we do see here the average purchase price for this round was $97,255, so right around the current price. Raised their overall average purchase price to $65,000, so still a really good adjusted cost basis for the amount of Bitcoin they have. They didn't buy any in their earnings week, obviously a blackout period there. They did report a fourth quarter net loss of $3.03 a share, so a pretty large loss. They missed their earnings. That being said, it was kind of expected. They're not adopting that FASB accounting standard until next earnings, so expect next earnings to be insane. They're going to have well over $12 billion worth of unrealized gains that they can claim on those earnings, and so that should look really good. Obviously, you see here that the Bitcoin purchases were made from proceeds on the sales of shares under the sales agreement and the perpetual preferred equity offerings of Strike, STRK. So that's kind of the new ticker that they've just started there as another option for them to raise capital to fund their Bitcoin acquisitions. But just going forward here, talked about Semler Scientific as well in the past. They've also added more Bitcoin. So they're another company not really related to Bitcoin or crypto initially, but kind of just recognize the inherent value of Bitcoin, now adopting this strategy here. So we see they purchased that 871 Bitcoin. They're holding 3,192. So that's interesting to note because Semler Scientific, their market cap is about $472 million, and they hold $311 million in Bitcoin alone. So that $311 million in Bitcoin is actually 66% of their market cap, so a substantial liquidity to market cap ratio, something we look for in these companies. Obviously, you see they purchased it with proceeds generated from their senior convertible notes offering and monetization of its minority investment in Monarch Medical Technologies. So Semler Scientific invests in all these different technologies, medical technologies, companies, that kind of thing. So interesting to see they use a combination of the monetization of their investments as well as the actual senior convertible notes, more similar to some of the other offerings that we're seeing miners as well as MicroStrategy previously using to acquire Bitcoin. Their average price for this Bitcoin purchase was $101,000, so above the market price. They hold almost 3,200 Bitcoin, acquired for an aggregate price of $280.4 million. So they're sitting on about $30 million of profit on their Bitcoin right now, at an average cost of $87,854 per Bitcoin, inclusive of fees and expenses. So still looking really good. They have that substantial liquidity to market cap ratio. That being said, I just don't know how much I would put into the actual company behind itself. I personally kind of like the Bitcoin miners. They're more crypto centric as well as actually having a similar liquidity to market cap ratio lots of the time. And then yeah, we do see here it was acquired for just under 90,000 a coin. So while it looks good right now, this market is volatile. It's not uncommon for Bitcoin to go in a 30 to 50% mid-cycle correction. If that were to happen, price is going to drop to 60,000, and then this now looks pretty bad on paper. If Bitcoin's trading at 60,000 and your average price is just shy of 90,000 and the majority of your liquidity is held in Bitcoin, it's going to be a pretty big hit to your balance sheet. MicroStrategy is kind of in a convenient situation where they're safe down to about 65,000 Bitcoin, and that's where they start to go in the red. But that being said, if we go below that, we could go lower in a bear market scenario. That being said, I do think we're going to come back up, climb out and above 65,000 and hold it eventually in the future. So kind of just following that. They do that Bitcoin yield KPI thing. I don't know how much I really like this yield, because the way I see it, essentially they've purchased this Bitcoin for $280 million and it's worth $311 million right now. So technically they're only sitting on about $30 million worth of profit. That being said, it is that kind of direct liquidity, so there is value in that. I kind of prefer, factoring in their total cost for Bitcoin and unrealized gains, as well as the Bitcoin value to market cap ratio. That kind of gives me a better sense of how a company is valued based on its assets. And lots of these companies trade at a premium to their assets. So when you're buying them, you're paying a little bit more for the Bitcoin you're actually getting, and you're not actually getting the underlying Bitcoin itself. So really understand that if you're kind of looking for Bitcoin exposure through companies like this. Moving over, we see Ethereum's record short position. So we see largest short position in Ethereum's history, up 40% last week, 500% since November 2024. So this kind of discussions about potential market manipulation or aggressive hedging strategies. There's no surprise that there is market manipulation in crypto. There's market manipulation in traditional stocks as well. We do see here there are some signs of bullish sentiment, but that being said, there's some signs of bearish sentiment as well, kind of especially around the global tensions just escalating. We see significant inflows into the Ethereum spot ETFs, accumulation by large investors, a potential short squeeze scenario. Obviously, analysts and traders are divided, with some viewing the short positions as mere hedges, while others anticipate imminent price surge due to the high short interest. So what I'm kind of interested in, or what kind of I'm worried about, is if everyone is assuming that something is going to happen, generally it's probably going to do the opposite. So if the whole market, everyone who's been calling for alt season for the last months, over and over and over, now they're all saying, here comes the Ethereum short squeeze. But if it was that easy, we would all be rich. So if we were all definitely had that crystal ball, knew what was going to happen, knew that this short squeeze was going to play out, we'd be all positioning for it. But at the same time, there's a lot of big money and smart money in this market. They can mess with us little retail as much as they want. They have the money to move prices where they want and as they see fit. So I kind of just am keeping this in the back of my mind. I could see that short squeeze potential. That being said, I could see that as kind of, lure people into the positions that you want them in, and then move the market in the direction that you want that's going to negatively affect them. So either stopping out traders, liquidating traders. So if a bunch of big money take huge, massive short positions down here, drive the price down a little bit, and then start closing, wait for retail to come in. Retail starts going long because they're expecting that short squeeze. And then what if they just start covering their shorts, or just dump the market more, sell those shorts into profit, as well as stopping out those kind of late traders who came in a little bit behind the fact. So just something to watch. We will be watching Ethereum going forward. But yeah, huge net inflows into the ETF. We saw about 145,000 Ethereum worth coming into the ETFs in the last 10 days or so. So again, you kind of see the first massive spike here, far exceeding that. That kind of took us from these lows here back up to this run here. That being said, we saw a similar inflow rate here, and this actually marked the current high for Ethereum. So assuming that we're going to go to new highs just because there was this amount of inflows into the ETF, it's about a 50% chance basically looking at it today. We see here it signaled an uptrend there, and then we saw over here that was actually the top. So just again following that going forward. Flipping over to our macro indices. So again, we're just going to get an idea of how the overall macro markets are looking. Looking at our dollar here. So we see, again, this is looking like a bearish setup. We want to see this break down in a path like this. I want to break below this support. And then again, there's this 200-week moving average rate here. Ideally, if we can get below this 200-week moving average, back test it, reject, then our risk assets are going to go on and do really well. We do see here kind of a bearish setup looking here. We've got our positive DMI curling back down. We've got the ADX on top of it. So yeah, once we see this negative orange line start curling back up, we want to see that bearish cross. We look like we're heading to a bearish cross on our MACD, and the RSI, it is curling over a little bit, but again, it looks like that first little peak. We'll see if we get another little bump up, or if we're just gonna break down and bleed further. We'll flip to the low time frame because we also want to get a good idea of what's happening on the low time frame. So here, this is kind of, it looks a little bit better. We still see kind of that curling over. MACD is again, curling back over, a little neutral here, kind of neutral DMI setup. So dollar looking pretty neutral. It's just stuck in this range for now. You do see here this is that kind of technical low time frame uptrend. So if we do break these highs, then we could potentially just continue back up. And then there's this confluence of resistance kind of with this down sloping trend line here, and then our horizontal marked resistance zone right here. So just watching that. Flipping over to the US 10-year, again, we're just stuck in this wedge. This is, bearish setup on the 10-year here for the DMI, bearish on the RSI, bearish on the MACD. So that's what we want to see. We want to see the 10-year. I mean, ideally, the 10-year could be breaking down for a couple different reasons. It could be beneficial to risk on assets because it's down today and we're seeing some green in the markets. It looks like it's a good move. We'll flip over to the SPY here. Again, so this is what we want to see. MACD a little oversold, RSI heading towards that bullish cross. We want to see the blue positive line and the orange negative line come down, cross, blue getting on top of the orange, and we want to see that red ADX line start to curl up to support another move up. And we'll flip over to our high time frame here to get another idea. So yeah, looking pretty oversold on the high time frame in terms of the indicators. But again, so yeah, we could get another push up here by the SPY. A couple levels I do have marked on the lower time frame. You know, we are right here into this volume shelf. So either we're going to break out, come back, back test this as support, and continue to new highs, holding this volume shelf as additional support. Otherwise, watch for this. Essentially, what we're watching for is that, again, continued rejection here. That being said, you know, we flip into the very low time frame and you can kind of see trying to reverse that trend structure. So you saw the lower high, lower low, lower high, higher low. So now we want to see that higher high, higher low confirmation, and then we can look at taking a swing trade on a breakout move above the SPY. NASDAQ up 1.3%, Dow Jones up. So yeah, green across the board on our major indices. TLT green as well, a little bit green, still looking good. TLT, we're riding that one. That one's fine. Bitcoin holding 97 well. Gold breaking all-time highs, breaking 2,900 again, just showing massive strength and kind of signaling to me that there definitely is an appetite for the risk-off assets. That being said, there is still an appetite for Bitcoin, obviously, getting a little bit of relief. That kind of being said, you know, again, we're just recognizing the broad risk in the markets, you know, not getting too aggressive. We're waiting for that confirmation, and then we'll take our positions when we have confirmation and know the likely continued trend that we're looking at for the near term. Until then, if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys tomorrow. We'll cover a bunch of different charts, and yeah, so keep you updated. I'll see you in the next one.